Right now, across social media, thousands of Americans are recording videos openly refusing to pay the IRS. At the exact same time, state governors are pushing legislation to outright ban local property taxes. These coordinated movements have formed a dual-front tax revolt, disrupting the reliable streams of revenue that keep modern society running. We have seen blueprints for this kind of populist uprising before. In 1978, California voters passed Proposition 13, a grassroots measure that aggressively capped how much the state could tax their homes. That 1970s movement was triggered by a severe pocketbook squeeze. High national inflation collided with sharply rising local taxes, and voters lashed out at the only levers of power they could reach. Today, those economic pressures have reached a breaking point, forcing us to examine how this new revolt is fighting a war in our backyards and against Washington simultaneously. The local battlefield is centered on suburban homeowners who are being priced out of their own neighborhoods. Since 2020, home values have shot up 27%. While that looks like wealth on paper, it gives local governments a massive revenue windfall by increasing the assessed value of those properties. This chart tracks average property tax bills, which have jumped 30% nationwide since 2020, directly following those inflated home values. Politicians are reacting to this data. At least 12 states are currently weighing ballot initiatives to severely cap how much these taxes can grow, or to eliminate property taxes altogether. To fund a state without property taxes, lawmakers have to find the money elsewhere. North Dakota's strategy is to dip into a $13 billion sovereign wealth fund, a state-owned investment account fueled by oil and gas revenues, to offset the missing tax dollars. Texas is proposing an alternative called a tax swap. They want to abolish school district property taxes entirely and plug that $40 billion hole by expanding the state sales tax. Both of these solutions highlight a difficult trade-off. Protecting home affordability means local governments either have to defund schools and public services or shift the tax burden directly onto consumers at the cash register. While the local tax revolt focuses on the economics of the home, the rebellion at the federal level is driven by moral objections to how tax dollars are spent. Tax scholars call this profane spending. Citizens look at their tax dollars funding foreign wars or aggressive immigration enforcement facilities and decide that participating in the system violates their personal conscience. The modern activist response is to organize online. A new generation is sharing guides on how to deliberately withhold their federal income tax payments. This tactic has roots in the 1960s and 70s. During the Vietnam War, up to 500,000 Americans refused to pay a 10% telephone tax that subsidized the military, joining a long tradition of war tax resistors. But there is a reality check for today's activists. The federal tax system is an automated machine built on a strict pay-as-you-go framework. The moment you refuse to pay, mechanical consequences kick in. For every month you ignore your bill, failure to file and failure to pay penalties accumulate and cascade, quickly inflating the total amount you owe. This flowchart maps the IRS's escalation pipeline. Ignore the warnings, and they trigger a substitute return, stripping your deductions to maximize the burden. Finally, they deploy enforcement tools, property liens on your house, bank levies, and even criminal charges. Unlike the legislative maneuvering at the local level, the federal tax strike is a perilous game of chicken with the most powerful collection agency on earth. To understand why millions of people are willing to risk their homes and bank accounts, we have to look at quasi-voluntary compliance. It is the psychological foundation that keeps the U.S. tax system running. That theory suggests that citizens only submit their taxes if they believe the system is fair, and if they feel a moral alignment with how the government is spending their money. Over the last decade, that trust has evaporated. We are seeing a rare alignment between the conservative suburban homeowner and the progressive activist, both feeling disconnected from the government they are forced to fund. Political leaders are trying to placate these voters. Think tanks are proposing structural overhauls, like the aggressive flat tax system outlined in the Conservative Heritage Foundation's Project 2025 playbook. But changing the tax rates fails to address the root cause. Citizens on both sides of the aisle feel the government is crossing their personal boundaries, taking their money to fund actions they cannot support. America's next tax revolt is a crisis of trust. It serves as a reminder that a government cannot function if its citizens no longer consent to pay for it.